What's going on YouTube? Welcome back to the channel. It's Ryan Scalps. In this video, we're going to go over what I'm seeing in the S&P 500, the SPY, the SPX, whatever it is you want to call it. I'm seeing a setup that could possibly end this bear market, right? Flush some of these bears out of this market. So we're going to go over that today, and we're going to go over what we can look for in the week to come with trading. So let's hop right into it. So now, before we get started, make sure you like the video. If you're new to the channel, click the subscribe button, and there's a lot of bears out there. So I want you guys to comment below whether or not you agree with me. I don't have a crystal ball. I don't know where this market's going, but I am seeing something I like on the charts. So comment below on whether or not you agree with me or where you think the market's going. So hopping into the daily chart. On the S&P 500, obviously we got the trend line of doom, right? This trend line. Now, the SPY has been respecting this trend line for the last year, all right? Our last lower low being at the end of October on that massive gap down and rally. How did we get to where we are now? What I want you to look at is the fact that we had a bit of an up channel, bullish channel towards the top of the trend line. Now, some people draw it like this as an ascending wedge, and I was kind of taking the news out of there and was drawing my trend line like this. So what happens? We either break the ascending wedge at the trend line or we break out of the down channel. We'll delete that one right here. When we break out of that ascending wedge, we have a new push towards an extreme high. Obviously a failure, but we don't create a downtrend after that, right? We don't create a downtrend. Generally, when you try to break out of a channel, you have an attempt, then you have an attempt at an extreme high, and if that fails, usually it resorts going to back down to the bottom, but that didn't happen. What happened is we created a trading range, and that's important. Now, not only did we create a trading range, but we created what I'm about to show you right here. Now, it's not perfect. It's not perfect. I would have liked this pattern to set up a little bit more towards the high, but what you have to take into consideration that this high was CPI news, right? So these are news events. These outliers are news events, okay? So when news happens, earnings happens, it can screw up the technical analysis. So we have to take that into consideration. But what I'm looking at right now is a cup and handle forming in the S&P 500 up near this downtrend line. Now, this is like the fifth test of this trend line. And generally, the fourth or fifth test is where you break it out. We tried here. It was a new attempt at an extreme high. Failure. Did not create a new downtrend, but created a trading range that is setting up a cup and handle. Now, you could say that this parallel channel that would form the handle starts here, or if you break it down into the hourly chart, it's already pretty much happened with a breakout. What are we looking for in the week coming? Well, obviously, we're going to look for bullish continuation above this daily candle. And what are we looking at for profit targets? If we use a simple measured move, like I showed you guys in my last video how I'm using on Tesla, and pull this up to the breakout point, we now have a revised target of 420 on the SPY, which would be insane. It would push a lot of these bears out of the market, and it could get even more severe to the upside because you have a lot of people shorting this trend line blindly, right? The downtrend's too obvious to short, it's crowded, right? That's what a lot of the bears on Twitter are saying. So if you got people really just YOLOing puts, YOLOing short positions at this trend line.
Give me money, me, money now. Me a money needing a lot now.
And you get a forceful break above it on this cup and handle setup, I think we push higher than 420. I think we could have a massive squeeze up, and I think this could potentially end this bear market, push a lot of these bears out. Now, is that what's going to happen? I don't know. What you have to take into consideration is the fact that we are in earnings season, and earnings season can obviously screw up any type of technical analysis you might have going on. You can see right here, you can see right here, you know, these news events will just break you out of the channels, break you out of trends, and break you out of any type of technical analysis patterns you have going on. But I like it. I like this setup. I like the fact that we retested the breakout here. Nice 50% move. You know, the technical analysis has been spot on. I'm a little worried about earnings for this play, but if I see some continuation, I am going to be trading it to the long side this coming week. Just obviously keep in mind, we trade what we see, not what we think. All right. So don't let your bias screw up your trading. If we get some downside momentum, you got to trade that as well. Do you agree with me? Do you think this cup and handle breaks the SPY out of the downtrend, or do you think that we are going to go to new lows? Let me know in the comments below. Snag that like button, hit the bell notification so you can stay tuned for future videos. If you're new to the channel, I'm going to start doing some live streams soon, some live trading. Hope you have a good weekend, Cowboys Nation, and I will see you on the next one.